Hey, what's up, my friend? So, welcome back to today's video. But before we begin, right, I just want to express my gratitude and thanks for all the comments, feedback, testimonial that you have left for me, right? Because every time I publish a video or I write an article, I see comments and feedback, and I take the time to read through every single one of them, including my emails, all right? So, for those of you who have contributed, right, in saying how much you have enjoyed the videos or the articles that you really resonate with and that it helps with your trading, right? I want to say thank you, right? The pleasure is mine, and I'm really glad that you found it useful, right? This kind of makes me feel that whatever I'm doing is worth it, right? It's not just for the monetary gain, because the money comes and go, but value, right? Value that you provide to others is something that goes a long way. So much more than that even money can't buy. Okay, so a big thank you to you. And anyway, back to this week's market analysis. I just want to walk you through a recap of the setups that I mentioned last week, right? Just to walk you through what actually happened and to talk with you a potential trading setups that I'm seeing this week, the Aussie Canadian, right? So all this and more in today's video. I'll see you there. Okay, so let's start with the trade review, right, of some of the trading setups I shared with last week, right? I think most of them didn't get triggered, but the one that came close is dollar Swiss franc, and I want to walk you through it, right? So dollar Swiss franc, last week we spoke about it, right, where the market closed over here, and I said that I was looking to long because there's a good chance that this market would retest back this level over here, this highs resistance. So again, on a daily time frame, when you see this type of parabolic move, it is difficult to get an entry unless you are trading patterns like an inside bar, right? I think that's possibly one of the few ways you can enter this type of move. Other than that, there's just no way to enter the trade because there is no structure you can lean against to actually place your stop loss. Okay, so this type of move, right? Remember, if you want to trade it, chances are you have to trade those individual candlestick patterns like the inside bar. Like for example, this inside bar over here. This is a possible pattern to trade, this inside bar. Other than that, for me, I find it really, there is just no other way you can hop on board this type of move. Unless you go down to a lower time frame. Alright, so on a lower time frame, you can see that, the price over here is much more, I would say, structured, where you can see the ebb and flow of it, right? Price trading higher, retraces, trading higher, retraces, trading higher, retraces, trading higher, retraces. So when it pulls back or retraces towards this moving average, this is the 50-period moving average, there is opportunity and ample time for you to actually, plan your trading decisions. Okay? So this was what happened last week, was that I mentioned that I was looking for this level, for price to retest this level, right? Looking on hindsight now, I figured, right, the 50 MA should be the one that I should have been trading, because this is clearly the moving average that is being respected by this market, right? The reason why, looking back right now, is that why I didn't trade at the 50 MA was because if you think about this, if I were to trade off this false break of this lows over here, which is, this is the entry trigger, I will put my stop loss, say for example, a buffer below this low, for example, 1 time the average true range. So maybe my stop loss is somewhere here. And I'm thinking to myself, if I were to do that, I would be cutting my trade into this previous resistance turn support, right? I don't want to be cutting my trade into this structure support, area of support, right? So this is why I didn't take the trade. And looking back right now, there is actually a way to go about it, is to actually place your stop loss even lower, even more conservatively over here. So what this means is that if the trade, right, the market, say for example, trades lower, right, this was my original intention to set my stop loss, but like I've said, I don't want to set it at an area of support. It doesn't make sense. So you set it below an area of support. So if it trades below, chances are this trend that you're seeing right now is probably invalidated. All right, it broke this support, it broke the 50 MA, and it formed a lower low. Okay, so yeah, that's what I should have done, right? So this is something that only occurred to me while I was reflecting through my trades this week. All right, so this is for the dollar Swiss franc. Okay, so moving on, there's a trade I took this week. Is actually New Zealand dollar. It's a very simple, straightforward setup, right? New Zealand dollar, if you look at it, right, it's pretty much still in an uptrend, right? This type of trend has pretty steep pullback, or you can see the pullback is pretty steep, and then it entered into this period of range over here. All right, so in a range market, right, what you want to do is just simply to buy low, sell high. To buy low, you can look to go long at area of support. So this was the entry triggered I had, right? Price came into this area of support, right? A false break below this low, and then this candle close higher. So it's telling you that, traders who go short on this break are basically now trapped, right? Because if you short the breakdown and price rallied higher, you are basically losing money. Yeah, so basically I went long on this. My stop loss wasn't at this low, right? I give it some buffer. It was somewhere about here. Okay, so we can see that this second attempt by the market to push price lower, this one over here, right, didn't get me out of the trade because my stops is somewhere here, right? So preferably, right, the best place to put your stop loss is where your entire trading idea is invalidated. So what this means is your stop loss want to be at a location where if price hits that level, that entire pattern, that entire setup is entirely wrong. Okay, so what do I mean by this? Is that, for example, that I'm trading this range, buy low, sell high, buying support, selling resistance. So if right now price were to come below and trigger my stops over here, what does it tell me? Right, chances are this area of support is most probably broken, right? I mean, it's broken. I don't want to stay in this trade any longer. Yeah, so this is what I mean by placing your stop loss at a level where it invalidates your trading idea, right? So if you look at the earlier example I shared, dollar Swiss franc, the 1 hour time frame, right? I said that, well, I didn't trade this, but I said that I would have placed my stop below this previous resistance turn support. So for example, say my stop loss, I give it some buffer, is over here. Okay, so if you look at this, if the market trades like this, goes up, comes down, and then it collapses, right? Chances are this trend that you're looking at is probably over, right? It broke the key 50 period moving average, which has been the moving average that is being respected in this market. All right, it hits this, my stop loss, which provides a lower high and lower low. So chances are, I would say, this uptrend, even if it's not coming to an end, it's probably, getting weak and the market could get, choppy. So this is what I mean by, placing your stop loss where your trading idea is invalidated. Okay, so that was the New Zealand dollar trade. Where is New Zealand dollar? Here, New Zealand dollar trade that I'm in, right? Still in. Currently, I think under the water by a little bit because I entered at the close. So we'll see how it goes on New Zealand dollar. So this is actually a very common setup. I can share with you another one that happened on crude oil. So you can see over here, right? This was the range, right? This was the area of support. False break. Traders who shot the breakdown got trapped and then it rallied higher. All right, so it really depends how you're managing this trade, whether it's a swing trade, trend following trade, right? Then you have different exits, a different way to exit your trade, right? So just another example to share with you on what this setup looks like. Okay, so that's all. Wait, no, there's more. that's not the end. There's more, right? Another market I'm looking at this week is the Aussie Canadian. I want to share with you Aussie Canadian. It's a short-term trade. It's not a long-term like the New Zealand dollar, where I'm trading off the daily. This is more of the hourly. So let me walk you through the background story of this market. Again, Aussie Canadian, right? Pretty much in an uptrend, right? Higher highs, higher lows. Okay, you can see, right? Pretty obvious. So my expectations for this market is right now I've drawn up my support resistance, right? This is the weekly resistance, weekly support resistance, and the black line here is the daily support resistance, right? So my take on this is that the market is likely to retest this red line over here. All right, and if it does break through, it could possibly even go back to gun for this highs over here. So my bias for this Aussie Canadian is towards the upside. So what you can do is go down to the 1 hour time frame and look for an entry trigger. So in this chart over here, you see that this market is 1 hour. The ebb and flow is much more obvious right now, right? You can see the higher highs, higher lows, retest the highs, higher lows, breakout, right? The ebb and flow makes much more sense for you to actually better time your entries. So where I'm looking at for this trade is for the market to retest this level over here, previous resistance that could potentially act as support. So if it does come lower, come lower, all right, I'll look for an entry trigger to go long in expectations that the market would retest back this weekly level that I shared earlier. And if it does break out, right, even possibly retest back the highs. So this is my trade setup for Aussie Canadian, the one that I'll be looking at in this coming week. right? And lastly, I just want to talk a quick one about euro dollar. Euro dollar, you can see that on a weekly time frame, right? It is smashing lower into this area of support over here, right? So I won't be surprised that a lot of traders are looking to get long, right? Because after all, this is a pretty important area of support, right? But for me, right, I'm not going to go long just yet because there is nothing bullish at this market at this point in time to go long. So what I would see, right, that I would anticipate is that if the market can consolidate over here, this area of support, right, for maybe say another 5 to 10 days, I'll be interested to trade the breakdown towards the downside. Why is that? Because you can think about this. This is a key area of support. A lot of traders know this is an area of support. Area of support, you should go long. So if after 5-10 days, the market is still consolidating at this area of support, you can be sure that stops will be built up over these lows over here. They will put their stop loss below this low because, if support breaks, right, they don't want to stay in this trade any longer. So where will they put their stop loss? Chances are, number of them will put below this low. All right, so I'll be interested to trade against this area of stop loss if the market does consolidate and break down. Right, so this is my take on this, right? But if the market is just rally off quickly, right, then there's no shorting opportunity to short this breakdown over here. Okay, so this is something I'm looking for on euro dollar, and we'll see how it goes. Okay, so that's all I have for you in this week's video. Right, if you've enjoyed it, feel free to hit the subscribe button below. And with that, I wish you good luck and good trading. Talk to you soon.